Behind the scenes, whispers of change echo through Tesla's production facilities. Challenges have led to a slight decline in vehicle deliveries. Setback, perhaps, but merely a pause in a grand symphony. What's happening is that Tesla is poised for an ascent into uncharted territory. With an astounding 2 million back orders for the Cybertruck, the pickup truck battlefield is Tesla's to command. The gauntlet is thrown, and competitors tremble as they grasp the enormity of the challenge ahead. As the road ahead unfurls, Tesla's unyielding focus on the battery storage business signals an additional leg of robust growth. It's a vision where the possibilities are as limitless as the skies. Stay tuned as we explore the enigmatic journey ahead for Tesla. Let's dive into the electric world of Tesla. For a moment, consider this. During the third quarter of 2023, Tesla's factories were buzzing with activity. They crafted an impressive 430,000 vehicles and handed over 435,559 gleaming Teslas to eagerly waiting customers. You might recall that just the previous quarter, Tesla birthed 479,000 Teslas, with 466,000 finding new homes. Why the drop, you might ask? Well, remember that little announcement during Tesla's Q2 2023 earnings call, the one about taking a short breather to spruce up their production facilities. That's right. Despite the short downtime, Tesla's delivery count still exceeded their production for Q3 2023. So what's the message here? The world's hunger for Teslas hasn't waned a bit. Tesla has already released its Q3 2023 financial results on October 21, 2023. Analysts are expecting revenues around $25.9 billion in earnings per share of 71 cents. Tesla's financial performance in Q3 2023 has been closely watched by investors as the company faced several challenges. These included the ongoing global chip shortage, supply chain disruptions, and rising costs. However, Tesla is also benefiting from strong demand for its electric vehicles, and the company has been able to increase production capacity in recent months. It remains to be seen whether Tesla will be able to meet or beat analyst expectations for Q3 2023. However, Tesla is well positioned to continue to grow its business in the long term. Judging by the number of Teslas cruising out the door during the quarter, we have a hunch that the actual results might sneak below these top and bottom estimates. Still, even with the dip in deliveries, there's optimism in the air. While the spotlight often shines on their cars, let's not forget about their energy storage stage act. It's likely to offset some of that impact on margins. We're glad you asked about margins. Even with milder revenues, our projections hint at plumper gross margins thanks to factors like the pricier Model Y, falling commodity prices, more hands-off assembly lines, and depreciation. However, that coin has a flip side. As Tesla amps up production for the futuristic Cybertruck and the energy-storing Megapack, coupled with increased investments in artificial intelligence, profit margins may slim down a tad. Consequently, this quarter's earnings per share might slide a bit compared to the last, but still soar higher than last year. Just to put a pin on it, Tesla's storyline remains steady. We're holding firm on our price target of $1,492 per share, crafted from a 10-year financial forecast. The math experts among you will appreciate our model, which assumes consistent revenue growth of 50% over a decade, profit margins of 10%, and other nitty-gritty details that scream buy. From the world of Teslas to the rugged realm of pickups, let's shift gears and talk about the upcoming revolution in the pickup market. Drum roll, please. The first Cybertruck is making its grand entrance off the assembly line. The streets are abuzz with talks of launch events, signaling that the Cybertruck's much-anticipated debut is just around the corner. Pickup trucks are a staple in the automotive industry, accounting for a whopping 20% of the U.S. automobile market, and Tesla's showroom needed this chunky piece of the puzzle. No more. The anticipation for the Cybertruck's unveiling has us all on the edge of our seats. Zooming out to take in the broader landscape of the pickup truck arena, Ford's F-Series pickups proudly wear the crown as America's top seller. They're an enduring symbol of American strength and versatility. General Motors' Chevrolet Silverado is a close contender in this fierce race for the hearts of truck enthusiasts. Now, enter the electric revolution in this rugged domain. Ford has made its electrifying mark with the F-150 Lightning, a truck designed to carry the legacy of the iconic F-Series into a sustainable future. With an impressive range of 320 miles, it's ready to roam far and wide. It also boasts a formidable towing capacity of 7,700 volts, making it not just a green machine but also a powerful workhorse. And all of this comes with a starting price that's remarkably accessible, beginning at just $50,000. On the other side of the electrified battlefield, Chevrolet's Silverado EV isn't backing down. With a promise of a journey spanning 400 miles on a single charge, it's set to rival the competition. What truly sets it apart is its astonishing towing capacity of 10,000 lbs, making it a force to be reckoned with in the world of electric trucks. Its starting price of $52,000 positions it as a competitive option in this growing market. Now let's turn our gaze to the highly anticipated Tesla Cybertruck. This futuristic marvel boasts an epic 500-mile range, setting a new standard for electric truck travel. Its Herculean towing capacity of 14,000 lbs leaves no doubt that means business. But let's not leap too far ahead. Both the electric and traditional fuel-fed versions of Ford and Chevy trucks are locked in the same arena as the Cybertruck, challenging its dominance and pushing the boundaries of innovation. In this electrified showdown, the stage is set for a battle of epic proportions, where the legacy of classic American trucks meets the cutting-edge prowess of electric power. The future of pickup trucks has never looked more exciting, with each contender vying for the spotlight in this electrifying transformation of the automotive world. However, with the Cybertruck's jaw-dropping specs, we predict it'll be the hot topic of driveway conversations. A word of caution, though. Demand may rev up faster than Tesla can manufacture these bad boys, thanks to the intricate design and production details over time. As the Cybertruck buzz grows louder, we expect Tesla to ramp up production, bridging the gap between supply and demand. Let's drop a bold prediction here. Despite its unique, almost extraterrestrial appearance, which some say lacks universal allure, we're betting the Cybertruck's sales will defy expectations. And while it might sound like we're playing the same old tune, hear us out. The Cybertruck is to the pickup world what the iPhone was to mobile phones. Remember the wave of change the iPhone brought? It wasn't just a phone, it was a revolution. Similarly, the Cybertruck, with its game-changing features, is poised to redefine the pickup experience. Watch as it electrifies the sales charts in the times to come. Now, the United Auto Workers have taken a stand. But here's the twist. It might not be the golden ticket Tesla was hoping for. Imagine the production lines of industry giants like Ford, General Motors, and Stellantis grinding to a halt. While many would hastily bet that such a disruption would be a blessing for Tesla, we're here to pump the brakes on that thought. Even if these automotive behemoths do feel a pinch from the UAW strike, they're more likely to absorb the hit of increased labor costs and pass it on to consumers. Why do you ask? Well, with the car industry raking in big bucks, these titans aren't going to let a labor cost increase of a mere 4% or 5% per vehicle run them off the road. Just look at Ford, GM, and Stellantis forecasting net incomes of $110 billion and $10.7 billion respectively for 2023. Now let's add another layer. It's not as simple as one player losing and another winning. Before things escalated to demands like a 40% pay hike, the UAW's earlier requests seemed fairly grounded. But such a hefty wage increase might just push auto companies to a future filled with robots rather than humans. Automation could very well become the name of the game in production. So, what's the takeaway here? In the short run, the UAW's stand might dent the profit margins of Ford, GM, and Stellantis, but fast forward, and these companies may embrace automation even more aggressively. Contrary to popular belief, this might not spell an outright victory for Tesla. The automobile chessboard is vast and every move has its repercussions. Ever heard of the Inflation Reduction Act, IRA? This green energy-encouraging giant, flaunting a hopping $400 billion in funding, seems to be playing in perfect harmony with Tesla's tune of driving the world towards renewable energy. The good news keeps coming. Tesla's electric vehicles are now even more budget-friendly, thanks to the investment tax credit. This tax incentive not only makes Tesla's exceptional EVs more economically accessible, but also promotes sustainable transportation options. It's a financial boost that enhances the affordability of Tesla's electric vehicles, inviting a wider audience to join the green revolution. But there's more to celebrate. Tesla's energy storage solutions, the Powerwall and Megapack, are also in the spotlight. With the potential to enjoy up to 30% in tax credits, this financial advantage not only emphasizes their environmental benefits but also adds a compelling financial incentive. With these tax credits, Tesla's energy storage solutions become even more appealing, aligning clean energy goals with tangible cost savings. It's a strategic move that showcases Tesla's commitment to reshaping our energy future while providing practical advantages for its customers. Now picture this. The IRA is earmarking a cool $122 billion to sprinkle some clean energy magic across rural America. And guess what? Batteries. This vision screams for top-notch battery storage solutions. And enter the USDA with its hands full of funding requests showing the sheer excitement and demand for this venture. Here's a crystal ball moment. With the U.S. potentially zooming from its current 33% reliance on solar and wind power to a massive 60% by 2030, utility companies might just be knocking on Tesla's door for their battery needs. Globally, Tesla's influence is expanding. From Europe to Australia to India, Tesla's energy storage prowess is lighting up places far and wide. Tesla's dance with the Indian government about the Powerwall is setting the stage for some interesting developments. Oh, and speaking of demand, would you believe the Megapack is already booked solid until Q3 2024? Tesla is not resting on its laurels, though. A shiny new megafactory just popped up in China, and they've got their sights set on even more expansion. Zooming out, Tesla's on a roll with another robust quarter in the rearview and a bright road ahead. But here's some food for thought. Tesla's stocks might resemble a roller coaster, promising thrilling highs and lows for day traders. Yet, this isn't just a fleeting thrill ride. Those who choose the buy and hold mantra for Tesla might just find themselves cruising on a scenic route with rewarding vistas. It's a tale of long-term growth, not just short-term gains.